Hi guys, it's SJ speaking, and in today's video, we're going to see about EAC analysis. So, what is EAC analysis? EAC analysis refers to the company, economy, and I refers to industry, and C refers to the company. So, it is a top-down approach of fundamental analysis. It involves first analyzing the economy as a whole, then analyzing the various industries and sectors, and then finally the company. So the economy of the country is first analyzed and then the various industries and sectors. For example, if you take banking sector, then we have to look at the private bank sector and public sector banks. Or if you select the IT sectors, we have to look at the various. You can look at the various sectors such as IT sectors, or you can look at the infrastructure sectors. And then after analyzing it, then finally the company. So this is EAC analysis. So EAC, what is economic analysis? So economic analysis is a part of fundamental analysis which involves analyzing the whole economy of a country or a region based upon various macroeconomic factors. So these factors, macroeconomic factors, influences the economy. So what is macroeconomic and microeconomic factors? So macroeconomic factors an influential environmental, fiscal or geopolitical event that can impact the monetary stability related to the overall economy of a country or region instead of a specific part of a population. So this macroeconomic factors, these factors influence the whole economy. So not a specific part of the population. They impact the whole economy of a country. For example, such as interest rate hikes, these impact the overall economy. So inflation, these kind of factors influence the whole economy. So this is an example of microeconomic factor. Then coming to the macroeconomic factor. Then coming to the microeconomic factor. It is a factor that can influence the decision making of individuals that can impact specific industries or sectors of the economy when some change is done to it. So these kind of factors doesn't affect the whole economy. Instead of the whole economy, it might impact specific sectors or industries. It might impact the individuals that are working on specific industries or sectors. It will impact the decision making of the individuals. So this is known as microeconomic factor. So economic analysis based upon various macroeconomic factors, various factors such as these kind of things influences the economy. So coming to the factors, there is inflation, interest rates, monetary policy, fiscal policy, GDP, that is the gross domestic product, and then the national income, retail sales, international trades, unemployment rates, industrial production, political factors, levels of savings and investment, linkage with global economy, infrastructural facilities, climatic conditions. So inflations. So what happens in inflation? The value of goods and service increases. It's because the value of money decreases, the goods and services cost increases, the price of the goods and service increases. So what do the consumers do? They begin to lessen their, they try to reduce the spending, and so the consumer spending decreases. As the consumer spending decreases, the products and service of companies that doesn't have demand. So the profits and sales of the companies drop, sales and profits of the companies drop, and so the share prices of the companies decrease. So in case of interest rates, the RBI, that is in the monetary policies, they might increase the interest rates in order to control the inflation, or they might decrease the interest rates if they needed to increase the money supply. So this is what is interest rates hike. So these kind of factors influence the whole economy. And then coming to the fiscal policy, where the government is this involves government's revenue and expenditures and taxation policies and kind of those stuff. And coming to the GDP, it represents the total value of goods and service produced within the country. And national income represents the total amount of money earned within the country. And retail sales refers to the sales that are going within the consumers. It represents the consumer spending and the sales that is taking place in the market. And international trades, that is the trades from within our country, from we are doing trades with other countries. No, that is what the international trade represents. And then the unemployment rates. If the inflation occurs, then the value of goods and service increase, and the company's profits might decrease due to the less in demand of the products or services. So the company tries to decrease its employers by firing them. So currently many companies are firing the employees, you can see, and they are saying that the recession is going to come at 2023. So this is what the unemployment rates represents. And then the industrial productions. So suppose the goods and service prices increases, it's a benefit for the companies. If the company sells a product at 10 rupees, it might sell it at 15. It is a benefit. But the number of people who are buying the products decreases. So this is one thing. And another thing is that the raw materials prices also increases. So as the raw materials price increase, the companies tries to limit the purchasing the raw materials. As it reduces the raw materials, the production also decreases due to inflation. So this is what industrial production represents. And then the political factors based upon the parties that come into power, they might support one sector, some might not support one sector. So this also influences. And then how many people are saving, and how much investments are taking place in a country, the people how much they are investing. So and then the linkage with global economy. For example, if our Indian economy is based, it is dependent on some other country's economy. If that company's economy falls down, then our country is also linked with that, and so it also gets impacted. So this is linkage with global economy. And then comes the infrastructural facilities available in our country and the climatic conditions. These factors are known as macroeconomic factors, which impacts the whole economy. So next come the industrial analysis. It is a part of fundamental analysis which involves analyzing specific industries on sectors based upon various microeconomic factors. So these microeconomic factors majorly affect specific industries. So, such as you can see how the industry is analyzed. You can see the industry life cycle. For example, you can see startup, growth, maturity, and decline phase. So this is known as industry life cycle. And then coming to the type of industry, the growth industries, cyclical industries. Cyclical industries only has demand for their products at specific times, specific cycles, and defensive stocks. Even if the economy falls, they have a stable demand for their products. Such as food stocks, FMCG stocks, they have always people always use these kind of stocks. So these stocks are known as defensive stocks or defensive sectors. And then the industry policies, policies of specific industries. SWOT analysis refers to strength, weakness, opportunities, threats. And then the pricing of goods and service, taxation of goods and service, GST, and other kinds of stuff. And then the import and export policies, taxation of how much taxation is for importing the products or or for exporting the products. And then socio demographic trends. So based upon some religious factors, ethical values, their beliefs, each country's persons, people will have different beliefs, different dressing sense, and based upon that, their demand for the products and service differs. So this is known as socio-demographic trends. And then the subsidies, it refers to the amount that the government gives freely to for production basis for some industries. Then the incentives, it's also similar to that. And then the labor wages, which involves for working, the laborers must be given wages. If we increase the wages of the laborers, they might be happy. The moral of the employees will increase. Morale of the employees get increased, and they might work hard, and the production will increase, which is good for the company. So these are the factors, microeconomic factors, which involves which this is the industrial analysis, and these are the factors which influence that. And then coming finally to the company analysis. It is a part of fundamental analysis which involves analyzing the company's business. There are two types of company analysis. One is qualitative and another is quantitative. So what is qualitative analysis? Qualitative analysis is analyzing the company based upon qualitative factors. So such as what are the products and services of the company, how much in future, what product or service it will deliver, whether that product or service will boom in the market in future. So now whether what is the business model of the company, what is the management quality of the company, corporate governance, it refers to the rules and practices used employed to manage a company. And then the competitive advantage, there may be several competitors. For example, in FMCG, there are Nestle, Britannia. So these two are rivals to each other, competitors. So what is the advantage of Nestle over Britannia, or what is the advantage of Britannia over Nestle? So this is the competitive advantage. And market share, for example, there are 5 companies in the same sector. What is the market share of one company compared to the others? What is the customer base of the company? How much customers it has? So, whether it's retaining the customers, whether customers love the products, whether the demand is increasing, whether the same customers are buying the product. So everything involves in this customer base. And then finally, the employee relations. what is the relationship between the employer and employee. So these kind of things are qualitative analysis of the company. And then coming to the quantitative analysis. This, it is based upon the quantitative factors, analyzing the company based upon quantitative factors. So this involves the income statement, that is the profit and loss statement, or known as income statement, and then the balance sheet statement, and then cash flow statement, and then ratio analysis such as PB ratio, that is price to book value ratio, or PE ratio, price to earnings ratio, PS ratio, price to sales ratio, return on equity, ROE, return on capital employed, such as those ratio analysis, analyzing the company based upon the ratio analysis, and then the annual report of the company. So company publishes the quarterly results where we can see the financial statements, whether how much profit it has made, how much sales it has made. So analyzing the financial statements is known as quantitative analysis. So whether EIC analysis is only based upon fundamental, it is a EIC analysis is actually fundamental analysis, but you can also use the EIC analysis also in technical analysis. How is, I will show you. So I'll show you a chart. Wait a minute. So this is the chart. I have brought Wipro stock. So Wipro stock, you are analyzing it and you are analyzing it and you are finding whether it's technically bullish. You can see it's technically bullish. So you are planning to buy the stock either at here or at here. You are planning to buying the stock. But before seeing that, before buying it, you must also look into the sector, the IT sector. This is the overall sector, CNX IT. This is the overall IT sector, which involves various companies, top companies in the IT sector, and the overall market, which is the Nifty 50. Nifty 50 represents the top 50 companies in terms of market capitalization. Market capitalization refers to market value per share into number of outstanding shares. That is the formula for market capitalization. So this Nifty 50 represents the top companies and it overall represents the economy of India. If these 50 companies fall, if the share prices fall, then there is something wrong with the economy. So we can come to a conclusion such as that. So if this falls, the economy is in trouble. Something, the economy is in downtrend. So you can see that the economy is coming down. Something is wrong with the economy. So before seeing the company analysis, you must watch the economy analysis. That is the indices, either Nifty 50 or Bank Nifty, such as that, and then look at the specific sector where you are buying the stock. In this case, Wipro, which refers to the IT sector. You have to see this. If the stock is in a, if the market Nifty 50 is in bullish trend and the IT sector is in bullish trend, then you can buy the stock if you find it bullish. Or only if the individual stock Wipro is bullish, but these two are bearish, then even if you buy the stock, you might face losses. It might seem like increasing, and then the market will go, the stock will go up, and it will come down automatically as the market decreases. So before seeing the individual stock, you also have to look and see the trend of the overall economy, that is the market Nifty 50 or any other indices benchmark, and then see the sector, the IT sector, or in the case of banking, the banking sector, and then look at the individual stock, and then you have to take a trade or invest. So this is EIC analysis on technical analysis. You can also use the EIC analysis on both fundamental as well as in technical. So this is it. So that's the end of this video, guys. So this is a short video. So hope you guys enjoyed my video. I will see you on my next video. So like, share, and subscribe to my channel, and also press the bell icon. You can press the all button so you get notified for all my videos. Then other than that, if you want to join my trading mentorship course, you can call my number on the scrolling below. I'll give you the details. And apart from that, if you want to open a Demat account, I have given you the Zerodha link on my video description. You can open your trading account from today itself. So thank you guys. See you on my next video. Thank you.